Hi everyone, my name is Manuka and today I will be talking about investing during this time of pandemic, and I'd also like to share with you one or two mistakes that I've made over the last few weeks from an investing perspective. With everything that is happening globally, economies are challenged now more than ever. A number of countries may already be in recession or going into a recession. The country that I live in is one of those. And ultimately, we may get to a situation where we are declared to be in a global recession or even a global depression. If you are already an investor, you would have seen a drop in the value of some of your investments over the last few weeks, and in certain circumstances it has been very significant, but it shouldn't be a reason for you to panic if you are a long-term investor. If anything, it's an amazing opportunity if you have the funds to be able to invest even more in the stock market and at lower prices. So it's a everything must go type of sale, but for stocks. I like it. I like it a lot. So let's touch on a few principles then, things to remember if you are in a position to invest over this next period. 3 principles. Number 1, you are using excess funds. So you are not dipping into your emergency savings below a certain level. You are not using money that you should be repaying your debt with. So this is excess money that you are not going to be needing in the next period, so short to medium term, maybe a year or two. So that's principle number 1. Number 2, stick to your investment strategy. So if you have been investing for some time, you know what has been working, you know what has not been working. So you are aware of what type of shares you wanted to invest in, have been investing in. So very important to stick to that. As an example, with all these shares that are plummeting, you do get people who are very curious and want to buy into a certain share because of the price. So let's say company X, for example, their share price plummeted from well over 400 a few months ago to just under 30 rands this month. Now everyone, I promise you, I'm getting so many messages from people saying, should I invest in company S? A lot of friends, family, people who want to get in. Now, you may be able to get in at a low price and make a few quick rands, which is what everyone's intention is. However, if you are a long-term investor, do not buy a share that you didn't think was a quality share beforehand. So for example, if I see a shoe and it costs 400 rands, I don't like the shoe, it's not my style, it's not me, and the shoe is now 30 rands, I can buy the shoe at 30 rands, but I didn't like it. It wasn't the right quality. I didn't like the shoe. Why should I buy it? So apply the same principles for yourself. Stick to your strategy. Stick to shares that you already wanted to invest in. So with me, for example, I have a list that I keep of shares that I want to buy into, and this actually gives me the opportunity to buy into certain shares, a lot of them blue chip companies that a year ago I couldn't afford to get into them, or thought I've missed the opportunity, it's now outpriced, it's too expensive to get in now. Well, guess what? Now I have that opportunity and I can get in at a lower price. Now, principle number 3 is the mistake that I referred to earlier. Principle number 3 talks about averaging. So with everything that is happening, the prices of shares have been so unpredictable. A share in one day can drop 10%, another day increase 7%, the third day drop by 10% again. So very important if you are buying at this moment is to average into the market. So if I use a simplistic example, if I had 1,000 rands and a share cost 1,000 rands on a Monday morning, and I bought that share at 1,000, I'm very happy because a few weeks ago maybe it had been trading at 3,000. So I'm hella excited because I've got it for so cheap. I log in on a Friday and same share is now trading at 500 rands. I just might want to hurt myself. But the reality is you do not know and cannot predict when the lowest price will be. So very important to buy at different points in time, and that will give you hopefully a lower average over time. If this share had started on 1,000 rand, dropped by 100 rands every single day, and is now down to 600 by the end of the week, I could have bought 200 rands worth of the same stock every single day at different prices. And at the end of the week, I might have spent 800 rands to get the same share that I bought on Monday morning. So that is the principle of averaging. So if you have excess funds, do not go all in tomorrow and buy everything that you can. Take it slow and steady over time, and that will give you hopefully a lower average. So those are the 3 principles. To recap, number 1, only use your excess funds. Don't dip into savings, retirement funds, debt repayment, only excess funds. Number 2, stick to your investment strategy. And number 3, average into the market over time. A bonus tip, this is for everyone, not just intermediate or advanced investors. This is a good time as well to buy ETFs. ETFs are exchange traded funds. So those hold a stake in different stocks, commodities, and bonds. So they are extremely diversified, which means you are at less risk because it is different industries and different commodities. This would be a great time as well to buy into ETFs. Please do research into those, but I will share something on those in the next few days. And please speak to your financial advisor about any of the investments that you want to make, and hopefully get you into the market at even lower prices. So I hope all of you will be making the right decisions. Hopefully this will put you in good standing and you will make a bit of money in the probably medium to long run. This is not a sprint, it is a marathon. And until next time, all the best and stay calm. Thank you so much for watching.